Hi viewers, Namaste. Do you think it is better to filter stocks which can have high activity in a particular period? We will be able to get a screening tool which ends up giving us best liquid and volatile stocks, right? Similar to how we filter stocks in equity market which has high volume activity and high delivery quantity, we can even filter stocks using futures market data too. That is by tracking the open interest in futures market. This open interest can be thought as a tool, lagging tool. So, in this video, we will discuss about open interest which is recorded in futures market. We will know what is this open interest is all about, what to interpret from it, how to use it for our tradings, and finally, let us also see where can we track this open interest quickly and comfortably. So, welcome to the world of GetTrading. You may be aware that similar to trading shares in equity market, we can trade contracts in futures market. If you are looking for basics on futures market, please consider watching our video on basics of futures market. Link can be found in the I symbol above and the description box below. Okay, this open interest will be recorded in both futures and options market too. We made this video considering futures market only. Let's start. First, what is open interest? Well, open interest is the number of contracts held still at that particular point of time. In derivative markets, you can either close your positions for profit bookings or loss cuttings, right? Now, the tool which shows all other contracts which are not yet closed, that is, the tool which is showing whichever contracts are open is called open interest. The interest open in market. If you are still wondering what is this open is all about, let us discuss this by a small example. Let's take three traders A, B, C in a particular script. Day 1. Mr. A, who is bullish in that script, goes to futures market. He wants to go 10 lots long. Now, Mrs. B, who is bearish in that script, wants to go 10 lots short. So, here happens the transaction. Now, volume traded is 10 lots. And what about open interest? Number of contracts open, right? It is 10 lots. If there is open interest before day, then this 10 adds to it. Now, day 2. Due to some fear, Mr. A, who went 10 lots long, now wants to sell 5 lots and close those positions. At the same time, Mr. B, who is bullish in that script, wants to go 5 lots long. Here goes the transaction. So, volume traded on the day is 5 lots, right? What about open interest? Contracts open. Previous day 10 plus today's 5. 15. Is it right? Wrong. If you observe carefully, only the existing contracts with Mr. A are being transferred to Mr. C. No new contracts has been opened. So, no change in open interest. Now, day 3. Mr. C wants to close his 5 lots long positions, that is, sell those. And Mrs. B, who is 10 lots short, also wants to close 5 lots, that is, buy 5 lots. Transaction happens between them. Now, volume traded 5 lots, no confusions. What about open interest? How much is the open interest till yesterday? 10 contracts. And what happened today? One buyer and one seller who are having short and long positions respectively close their positions. How many? 5 lots. So, today's open contracts are 10 minus 5, 5 lots. And this is open interest at the end of the day. Making sense or not? We can explain you with more participants and more transactions. But we feel that this basic information is sufficient for understanding open interest. If you still have some doubts, please consider rewinding and seeing back. What you must understand is when this open interest increases, when this stays flat, and when this open interest falls. Now, I'm sure you can guess what is change in open interest. In this case, open interest is increased by 10 lots. In this case, there is no change in open interest. And in this case, open interest is decreased by 5 contracts. We can also see these changes in percentages, which is one way markets see too. Now, tell me one thing. Who moves markets more? Is it retailers like us or Fyers, DAS, that is institutional traders? Definitely institutional traders. They are the market movers, right? These institutes actively participate in equity market, and these derivative markets are used for hedging and speculations too. As these strong hands has early access to news, they take their positions quickly and strongly. All this urgency can be seen in the open interest. Okay, why does anyone go bullish or bearish in futures? Because they are in same view on the underlying asset too, right? That is in the equity markets too. So, can we say that tracking this open interest in futures market can give us some insights in the spot market too? Yes, but how to analyze that, let us see now. But before that, in any transaction, a buyer gets a contract only when an option seller sells the contract, and a seller can only short if there is a buyer on the other side. So, there is no question to think whether buyers are more or sellers are more. So, what is the correct approach? To know whether buyers are aggressive or sellers are aggressive. In that way, we can try to predict future price. Actually, proper usage of open interest is when it is analyzed in combination with price variations. Let us see how this is done. Important part of the video. But before that, let us see some facts. 1. If buyers are aggressive with their buy orders, price rises, and if sellers are aggressive with their sell orders, price falls. 2. Buyers and sellers both have their own perceptions on the market while taking positions. Which one is right? Future price will decide, correct? 3. When traders aggressively close their long positions, that is selling, right? So, price falls. And in the same way, when traders aggressively close their short positions as they become buy orders, price rises. Okay, we are all set to analyze open interest with price to predict future. Let us see different possibilities. First, open interest rising, volume rising, and price rising. What does this mean? More participants are interested in that script, and there is rise in price too. So, can we say that more participants are bullish on that script? Aggressive traders may have opened their long positions or added to their existing positions. This may mean that aggressive approach may continue in the future too. So, this is a bullish continuation signal, which indicates further movement on the upside. Second situation, open interest rising, volume rising, but price is falling. What does this mean? More participants are interested in that script and price is falling in that time. So, this may mean that aggressive sellers are actively shorting new ones or adding to their existing positions. By assuming that this continues, which happens most of the times, this is a bearish continuation signal, which indicates further weakness in that script, that is, price may fall more. Third situation, open interest falling, volumes falling, but price is rising. What this may mean? Market participants are exiting from their positions, that is, they are squaring off their positions, and price is rising at this time. So, can we say that bears are squaring off their short positions? So, rise in price is only due to short coverings. Fourth situation, open interest falling, volumes falling, and price is also falling. Here also, market participants are squaring off their positions. Price at this time is falling. So, can we say that bulls are squaring off their positions with sell orders? So, decrease in price is only due to profit bookings of the bulls. Now, many market participants, when analyzing this open interest, give somewhat less importance to volumes than open interest and the price. Small note, we personally suggest traders that point 1 and 2 can be used for entries and point 3 and 4 can be used for profit bookings. As said before, this is a screener tool. Scripts which are picked from this screener should be individually analyzed on charts or news, and only after that you must take your decisions on your trades. Now, look at this table. if we want to talk about this in stock market technical terms, when open interest rising and price is rising, that condition is called long buildup. When open interest is rising and price is falling, this condition is called short buildup. Next, when open interest is falling with rise in price, then it is called short covering. Last but not the least, open interest falling with price falling. It is called profit booking and can also be called as long unwinding. Okay, tracking this in Fyers 1 is very easy. This is Fyers 1 platform. To open the screener, click on FNO analysis and select action in futures. This window which is opened has the results of whatever we discussed till now. We can select which group to screen. Let us check Nifty 100 scripts. I personally screen only Nifty 50 scripts and analyze. But for now, let us screen Nifty 100 scripts for this open interest data. See, this is long build-up list. Price up and open interest up. This short build-up list. Price down, open interest up. This short covering. Price up and open interest down. And this is profit booking or long unwinding. Price down and open interest down. Let us check long build-up first. See here, Aurobindo Pharma price rose by 17%. Open interest rose by almost 10%. Some approval news on Hyderabad unit, US FDA approvals, so price rose. Okay, we can further save time by analyzing only stocks from our criteria. That is, 1. If we need to choose scripts which have recently rise in open interest or scripts whose open interest is rising from many days, it is better to choose the recent change one, as a script changing from many days may have moved so much that you may not have any movement left. 2. When taken open interest into consideration, decent rise in open interest is 8 to 10%. You can even analyze small movement scripts, but don't you think you want to participate in highly interested scripts? Okay, there is a problem with high rise too. Due to euphoria, open interest can rise too much. In these scripts, even a small trigger can create panic. It can change markets drastically. Next, taking price into consideration, 2 to 4% change is a decent one. If the price is moved like 10% or so, do you think that there will be more movement left to you? Mostly no. So, viewers, please keep these into considerations. Other scripts in long buildup, Intraday, Dr. Reddy's, etc. Now, let us see scripts in short buildup. Chances of a downtrend continuation scripts. C. Bank Nifty. There is a good rise in open interest and good fall in the price. So, there are chances of a downfall in next few sessions. Likewise, Bajaj Finance. Next, short covering, profit bookings. As said before, these can be used for profit bookings. Few participants use these for trend reversals too. We can cover those in some other video. So, what's the takeaway till now? Those who have some strategies but don't know on which scripts to analyze can use this as a good screening tool. In just one window, we can group all the scripts which can have high activity in near future. Later, it's up to you to go in the trend or against the trend. Please do not go against the trend until you're damn confident. Okay, for analysis on charts, you can just drag and drop like this into the chart area. Actually, let's check charts on Fyers web, where we can analyze well. Let us see Intraday. See here, there is a good support which is converted into resistance line. This is just an example. As I said, you can have your own way of analyzing charts. Let us see short build-up script, Bank Nifty. We can look for sell signals as this is under short build-up, bearish strips. Let us see on 1 hour chart. See, here there is a rising channel. What is a rising channel and what is the result of it? It is a bearish signal, mostly, right? As said before, you should use your own strategies. What I want to tell is, this open interest can be used as a scanner to filter good stocks to analyze. Daily, you can get at least 1 or 2 stocks, each on both bullish side and bearish side. The recently filtered script and the trend can be used for intraday trading or even for short-term trades. But the reliability may be only for 2 days or maximum to a week. Of course, if there are more confirmations later too, then we can continue our holdings. But as said, dependence of this data will be varied for only 2 days or a week. Okay viewers, this is all about open interest in futures. Let us meet in our next video on same open interest but from options point of view. So please stay in touch. Have a happy, safe and profitable trading. Jai Hind.